Good evening, everyone. I'm Siddesh Chavan from E&Y Investor Relations, and I would like to welcome you to the Jash Engineering Q4 FY24 earnings conference call. I would like to indicate that all participant lines will be in the listen-only mode, and there will be an opportunity to ask questions after the opening remarks conclude. Should you need to ask any questions, please select the Raise Hand option under the Reaction tab of the Zoom application. We will call out your name and then request you to unmute yourself to ask the question. While asking, please begin with your name and your organization. Please note that this conference is being recorded. The recording will be made available on the website within a day, and the transcript of the call shall be made available subsequently. To take us through the results and answer your questions today, we have the top management of Jash Engineering Limited, represented by Mr. Pratik Patel, Chairman and Managing Director, and Mr. Dharmendra Jain, Chief Financial Officer. Before we begin, I want to remind you everyone about the safe harbor related to today's earnings call. Comments made during the call may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause future result performance or achievements to differ significantly from what it is expressed or implied by such forward-looking statements. After the end of this call, if you need any further information or clarification, please do get in touch with me. With that said, I will now hand over the call to Mr. Pratik Patel. Over to you, sir.
Good afternoon, everyone. Welcome to our investor presentation post announcement of our results for this year. I would like to present a brief PowerPoint show in which we explain what we have done and what we intend to do in the next year. Next. To those who are new to the company, I would like to inform you that we are a company making equipment for water wastewater treatment plant and pumping station conveyance lines. We have 6 manufacturing units. Earlier we had 5 manufacturing units. The 6th manufacturing unit is now being inaugurated in UK, Glasgow, on 31st of May. This is the unit belonging to Waterfront, which we acquired recently. So with this 6 manufacturing unit and 1,075 employees, we are doing business in more than 45 countries, and our consolidated revenue for FY24 was 522 crores. Next. This shows the stages, how the company has grown and evolved over a period of time. The latest addition, which you can see in 2023, is about acquisition of Waterfront. So with this acquisition, now we enter the UK market, and we are very hopeful of a bright future in UK, similar to, and we intend to do in UK what we have done in America. So the acquisition is nearly on the same pattern, except that Waterfront was an operative company and we have taken over an operative company for the first time. We acquired many companies over a period of time, starting from Shawsil, which was water hammer control valves manufacturing company, Shivpal, which is process equipment company, Mahar Machine and Bow, which was in screen business, a very well-known brand worldwide, Rodney Hunt, which was a gate company, one of the very old gate companies of the world, and Waterfront, which is again a gate company. The acquisition of all these companies have been done with an intention to either grow the product portfolio or acquire brands so that we can increase our export to international market. I believe that our acquisition of Mahar Machine and Bow and Rodney Hunt has proved quite successful, because today our exports out of India, the business out of India, is close to 60%. Next. Coming to our plants, the 6 plants which we have been every year adding on our manufacturing capability. So this year we have added up a new fabricated product plant in Unit 2 for stainless steel product. And this year, current year, we are adding in Glasgow at Waterfront a new facility. So with all these facilities which we own now, our turnover potential has come to around 800 crore. So we are committed to build facility as we grow. With 800 crore turnover facility, I think we would be able to sustain till next year. However, once we again add new facilities in SEZ next year, we intend to take this capacity up to 1,000 crore in a year or two. Next. This is a slide showing varied type of facilities which are in-house and which shows that most of the critical facility which a product company like ours need has been invested upon and is available with us. Next. As you are aware, we are a water industry company making equipment for water, wastewater treatment plants, pumping station, conveyance line, also desalination, and so on. Most of our products are shown here. We are predominantly, as of now, in water control gates and screens. These two products contribute to more than 70% of our annual revenue. However, we also have various other products like screening, conveying equipment, knife gate valves, special purpose valve, bulk solider handling valves, which contribute another 10%, and then process equipment and hydropower equipment and screw pumps, etc. Bring another 10% to our business. New products which we have introduced, can you go back? New products which we have introduced for secondary treatment like diffuser, aeration systems, mixing and aeration, decanting, turbo blower are now being launched in India. It is German products, so it takes time, but we hope that as India proceeds towards reuse of water, all these products would become quite integral to our future growth. Next. These products are used in water intake, in stormwater pumping, water wastewater treatment plant, irrigation systems, desalination, power plants, paper and pulp plants, petrochemical plants, steel plants. In industry, wherever you need lot of water as process requirement, we are there in those type of big plants, industrial plants. Other than that, major of our business is in municipal and irrigation. Next. As I said before, 60% of our product portfolio comprise of water control gates, 15% comprise of screen, 15% comprise of valves, and 10% comprise of miscellaneous equipment. Now these vary little bit every year, here or there, depending upon type of projects which we get. But this mix is something which would vary not more than plus minus 5% in the coming year. Next. When we started on our journey, we had decided that we need not be India-centric. We should be more focused towards business out of India. I am glad to inform you that this year our revenue out of India is nearly 60% of our total revenue. We are doing business in Europe and Africa, we are doing business in USA, we are doing business in Middle East, in far and Southeast Asia as well as in India. We continue to expand our markets by entering new market. This year we have entered into Vietnam, and we also aim to enter into Laos, Cambodia and Indonesia. One of the key factors contributing to our growth is that we are approved by most of the clients and consultants in India and outside India as well. This business is based on approval. If you are approved in a project, pre-approved in a project, the contractor will come to you to buy your equipment. And so pre-approval is very critical to grow. I am glad to say that in whichever market we enter, we are approved because of our credentials and because of our past performance in varied markets. Next. This shows our approvals in the international market. The list is much bigger. We have used here only few names, which may have better recall. But other than these consultants and contractors, we are approved by many other big international players as well. Coming to the purpose why we are here today, I am pleased to announce that the three performing companies of the group, that is Jash Engineering, Shivpath and Jash USA Rodney Hunt, have together achieved mixed type of result. The revenue growth in case of Jash Engineering and Rodney Hunt has been excellent. Jash Engineering has shown 25% revenue growth and Rodney Hunt has shown nearly 30% revenue growth. In case of Shivpath, we had some setbacks. The setbacks were not because we had poor order book position. The setbacks were because the projects for which we had got the orders had got delayed in the execution, and so we could not produce equipment and deliver within the year as planned or envisaged. So on the revenue front, overall we have done good. In case of Shivpath, we do expect that this year will overcome the shortfall and again be on the path of fast growth. Coming to profit after tax, the profit after tax in Jash has grown significantly by say 23%, and in Rodney Hunt there has been a stupendous growth of more than 110% in our profit. In case of Shivpath, the percentage has reduced because the revenue has reduced. However, we believe that we have a good chance of recovering on PAT also in Shivpath this year. Next. Coming to the financial, consolidated financial snapshot, we would like to show you that over the years we have been growing consistently. Some years we have grown very fast and some years have been moderate. But I would say we are growing at a CAGR of more than 15% year on year. We expect this growth to continue in future also. Our gross profit also, as you can see, is improving significantly, as well is our margin, gross margin, profit margin. In FY24, our gross profit margin has been 59.7%. The EBITDA and EBITDA margin also shows marked improvement in this year. Last year was 18.6%, this year is 20.2%. As I have been informing all the investors over the last few years, we are quite hopeful of increasing our EBITDA margin up to 23-24% in time to come. Coming to profit before tax, there has been a stupendous increase of 47% in profit before tax, as well as 29% increase in profit after tax. Our ROE also is quite good at 19.7, with the increasing base of reserve surplus and cash position of the company. It is dipping little bit. However, I consider that our ROE is also quite good. Next. Coming to our performance, I am glad to inform that in comparison to FY23, there has been a slight increase in our PAT margins. These were 12.5% last year, and now this year is 12.8%. As already informed by me before, that we expect PAT margins to grow between 12 to 14% in time to come. I am quite confident that if we keep on growing like this, we would be able to deliver on the expected lines. Next. The earning per share also, EPS earning per share also has increased significantly. Last year it was 43 rupees per share, now it is 55 rupees per share. This is a consolidated balance sheet. You can see that our shareholder funds also is increasing significantly nowadays. Coming to next. Coming to our business outlook in the next year, our order book position is quite strong. All the three companies of the group, Shivpal, Jash USA or Rodnian, and Jash Engineering has strong order book position. Our combined order book is 816 crore, of which business outside India is 551 crore and within India is 265 crore. This 816 does not include the current order booking of Waterfront UK. This current order booking is close to 30 crore, and we hope that when 80% of this is order book of Waterfront is added to the combined order book, we are looking at something like 225 or 230 odd crore as 35 odd crore as our combined order book, including Waterfront. 30. Consolidated order pipeline is good. We have a lot of orders under negotiation, and we have also a lot of orders which are already negotiated. As on 1st May, our orders which we have already negotiated and which we expect to receive are of 31 crores. And orders under negotiations are also around 33 crore. This does not include marquee big orders which are under negotiation. The reason we do not enter very big orders which are under negotiation is a single order could be more than 30 to 50 crores, and it will skew what we have shown here. If even it goes ahead by a month, it would show that instead of 80 crore, we have got only 30 crore or 40 crore order book position. So what we show in order pipeline is generally moderate size order, not large ticket orders which are under negotiation. Next. Coming to our consolidated sales outlook for 24-25, I am pleased to inform you that we are expecting close to 30% growth this year and achieve a combined revenue of 675 crore. This, in case of Jash Engineering, we are targeting 460 crores, including the revenue from Shivpal. Shivpal is being merged with Jash Engineering. The merging date permission has yet not come, but when the permission comes, it would be from 1st of April 2024. So the combined revenue of Jash Engineering along with Shipar is projected to be 460 crores. That of Rodney Hunt is projected to be 280 crore, which also is close to 30% over last year. And waterfront, we expect 40 crores revenue. The overall revenue of the company, waterfront, is expected to be 50 crores. However, since we own only 80% of the company, we have shown 40 crores. During the year 23-24, we have done lot of activities as well as lot of activities under our CSR. We made a canteen with a dense forest along with a water recharging pond of more than 40,000 square feet. And I'm glad to inform you that this facility has become very good for the industrial sector where we are located, and has become one of the key points where all industrialists, all workers, staff can come, eat and have a good time. We also were awarded the National Energy Conservation Award for our foundry in 2023. Subsequent to that, we had lot of interaction with the government, and I'm pleased to inform you that based on those interactions, the government has now, in their new hydro policy, a small hydro policy, approved our technology for all the hydropower plants. This should bring to us great revenue growth in our screw generator business in future. We are doing a project with Tata Project for Nuclear Power Corporation in Chennai, and Tata Project has awarded us for the best quality on this project. Coming to highlights of 23-24, we have inaugurated the new plant for making and assembling stainless steel products. This was commissioned in September 23 and came in production sometime in December 23. This year would be the year when we would be able to harness the full potential of this plant, because we will have the plant in operation for 12 months. Next. One of the trademark of Jash has been that we are investing in facility enhancement every year in each of our units. We have invested in CNC machines, in cranes at various places, so that we are able to rapidly grow as our business expands. Next. I'm pleased to inform that a company like Jash is able to grow only because of our employees. And in view of that, we keep on building infrastructure within the campus so that our employees feel committed to the company and feel that the company cares for them. In line with this, we have invested on a sports turf at Unit 2, in which we have a turf league season also, and this same turf is used for training for our Jash Premier League, which is now has entered season 6. Next. Under our corporate social responsibility, we are investing 2% of our profit under CSR, and every year we personally ensure that the money invested is taken care of by proper supervision by company employees. We are helping in education of weaker students, tribal students, infants, and orphan students. We are also helping engineering college with my alma mater BVM by building a digital laboratory, digital lab, which would be costing more than 1 crore rupees. Every quarter we are committed to give 11 lakh rupees for this lab. One of the key parameters of our growth over the years is that every year we aim to develop or add 2 to 3 new products. This year we have already added, we have already added vortex mechanism with grid classifier. Next. A combined screening and grid removal system. This is for small treatment plant. You don't have to go on civil work and you can have a complete small package plant to remove grid and screening. And this is the first such plant which we have made, and we hope to further do a lot of development in this business. We also made our first set of bladder vessel, which is required for water hammer control. Next. And also the complete new design of this filter. This filter was co-developed by Invent and Jash, and the first concept, this filter was made completely in India. This would be put into the field for trials, and once the trials are done, this would be then launched in the world market by Jash in India and by Invent outside India. The production would be done in India only. Next. We will show a few slides showing some of the prestigious jobs which have done through the year. This is a traveling band screen which is for the nuclear power plant in Chennai. The whole mock-up is to show how the screen would be installed at site and to show the screen in operation to client who had come for inspection. Similarly, this is another type of screen for the same project. We have to supply 16 and 16, 32 such screens to Tata Projects for NPCIL project in Chennai. What is very important is that NPCIL as well as Tata Projects have appreciated our quality, have appreciated the pace at which we delivered, and this has opened doors for us for future screen business in NPCIL. As you may be aware, the government of India is focusing a lot on growing nuclear energy and huge investment is planned. So this augurs well for the company since we have done this project now. In case of Reliance Jamnagar, we have given the first 1 millimeter opening traveling band screen in India, and once this is installed, Reliance aim to go for 7 further screens like this. We also made some of the biggest ZV valves, zero velocity valves of 3.25 meter for NVDA project of Kaltar in MP. This shows a 2.2 meter diameter knife gate valve which we produced for Bandu Influent Pumping Station in Mumbai. This was done for SMC infrastructure. For the coming year, I'm pleased to inform that we are inaugurating on 31st May a new manufacturing facility in Glasgow. The hall which you are which you are seeing presently as an empty hall, all the machineries have reached now in UK and is in the on the way from port to this facility. And by 31st May, most of this equipment would be installed and this plant would be commissioned in first week of June. As I had said that we give a lot of attention to our employees, we are setting up along with the turf cricket ground a restaurant which would be run under lease, where our staffs and employees can eat at a discount, and the lease rent would be used for various employee engagement activities. This is not a business activity for us. We are looking forward to the lease rent, which can not only help our people with the employee engagement activities, but also help our staff to relax and enjoy in the evening, or help the company in taking the guests visiting it for lunch or dinner. The Shivpad manufacturing plant is at an advanced stage now. We have come over the ground and the installation of PEB has started. We expect this plant to be commissioned in December 24. Most of the equipment required in the plant has been ordered, and this will start arriving from September, October, so that we can commission the plant in December 24. As I said before, this year we have achieved 60% revenue outside India. We are going fast in export market and have already run short of manufacturing facility in SEZ. We are now planning to build next year one more plant in SEZ so as to increase the capacity of Unit 4. We have already been allotted the land just in front of Unit 4, and once the documentation and everything is over, we plan to start construction by end of this year and have the plant ready in 25-26. In the end, I would like to inform that we have had overall improvement at every parameter. Our revenue has grown by 26%, our profit after tax has grown by 29%, and our earning per share has grown by 28%. However, what is most important is that whatever we had promised, we have achieved. Not only we have achieved, but we have exceeded on the guidance given by us. Also, what is very important is that Rodney Hunt is finally in a position to deliver as what I had projected many years back. I had always maintained that Rodney Hunt would be the main savior for Jash in the long term. And today it is coming true. Due to improvement in Rodney Hunt, we have been able to give consolidated PAT margins of 12.8% in this year itself. As Rodney Hunt improves further, this year we did $26.5 million revenue in Rodney Hunt. Next year we are projecting $35 million revenue in Rodney Hunt. We already have order book of $43 million in Rodney Hunt. So it means that next year also Rodney Hunt would grow by more than 30%. Hence, improving profitability of Rodney Hunt will lead to improving consolidated PAT margins for the company. And in years to come, I am quite confident that with varied investment in companies like Waterfront or new plant in Chennai or new markets within USA, the confidence of the US client to go with us, etc., as well as my very strong order book position of more than 815 crore would enable us to easily achieve the projected revenue of 675 crores while maintaining the PAT margins in the range of 12 to 14%. Sometime back, I had also informed that we have new drivers for growth. These drivers are new markets and countries which we aim to enter, new products which we are launching every year, and a very strong order pipeline on account of environmental and weather disasters taking place worldwide, and the rising sea levels, which is a big threat to many countries. All these should enable us to grow fast in the coming years, and we aim to now double our revenue to over 1,000 crore by financial year 28. That is in 4 years' time. We are quite confident about achieving this, and also we are confident that we will keep on improving on the margins. Thank you.
Thank you. We will now begin a question and answer session. Gentle reminder to all the participants, to ask a question, please select the raise hand option under the reaction tab of Zoom application. The first question is from Mr. Naveen. Please unmute yourself and go ahead.
Pratik sir, congratulations on very good set of numbers. Sir, historically, we have been guiding for around 15 to 20%. For the first time, we are guiding for more than 30% revenue growth. So what is giving this confidence, and what do you see as a risk to this growth number?
Naveen ji, 815 crore order book is already in hand. So even if I do 675 crore, I will be making many clients unhappy, because I will not be able to deliver to them. So ideally, I would say the company should be targeting for more than 700 crore this year. I would say conservatively 675 crore is targeted. This is conservative according to me. If everything goes right, see, most of the time we are dependent on EPC contractor. We may produce and he may not take delivery. So in spite of having orders, we may not achieve the desired targeted revenue. But the difference between what we have today, that is 815 plus say around 20 crore of Waterfront, and what we are projecting, 675, is so great. The difference is close to 150 crore. So the possibility of not achieving 675 crore, I would say, is very rare and can happen only if something goes wrong worldwide, like a war or something, some other global crisis, etc.
Sir, my second question is, there is now a lot of talk of reuse of water, especially in India, like cities in Bangalore, which went through a bad phase this summer. So how are we equipped to cater to this demand, and how is this demand outside India also? Is there a market for the product like this?
In Singapore, Tuas water reclamation project, I have already informed we are doing more than 100 crore business. That is a water reclamation project where shit water is converted into drinking water. Bangalore is the first city. You will see over the years many cities joining Bangalore in the same situation. Reuse is going to become a critical parameter for India and many cities of India in next 3 to 4 years. You will be surprised at the type of crisis many cities in India would be facing, and all of us would have to think of reuse, putting aside past dogmas of using wastewater for process or drinking.
Do we have equipment catering to this?
The Invent product line has, the existing product line also caters to that, but the Invent product line specifically caters to that. So I believe that the reuse business, I have been projecting all the time that the market for reuse will become very exciting by 2027-28 or 28-29. By that time, we would be well established with these products, and we aim to be a market leader for reuse business.
Thank you, sir. I have more questions. I'll get back in the queue.
Thank you. The next question is from Mr. Dilip Sahu. Please unmute yourself and go ahead.
Yeah, can you hear me?
Yes.
Yeah. Congratulations, Pratik Bhai. I think the guidance is superlative, and I'm sure we will achieve it. I have basically 3 questions, Pratik Bhai. One is regarding UK. If I remember last quarter, I think you had a business meeting. The UK team was here. So can you give us some brief about, how the marketing momentum in UK we are trying to build? Because, they had their own share of problems, and we have gone through now, I'm sure, the whole reorganization part.
So in UK, we started projecting 4 times growth in 4 years. So something like this year they have done 3 million, 3 point some million pound, and we expect to do 12 million in 4 years. Well, that is old news. Now we are at the verge of resetting the targets, and instead of 4 times in 4 years, we are talking of 5 to 6 times in 4 years.
Okay, so 5 to 6 times means around 200 odd crores in 4 years.
Yeah, we are planning 18 to 20 million pounds, like 200 crore in 4 year time.
Sure.
So from 30 crore, 35 crore today.
Yeah. So around 250 crores 3-4 years back to around 1,000 crores 3-4 years from now. So that's a 4-5 times jump Jash will have in a matter of 6-7 years. If I remember the first time I met you in 2019, we are actually doing around 250-270 crores, if you remember. So it's a big jump. And in the process, we have built manufacturing assets outside India. We have created financial assets outside India. So for 1,000 crore, truly multinational, multi-locational company, how do you think the organization will look like? Like, what is that you are going to have in Indore? Obviously, the management team is in Indore, but apart from management team, both in terms of the engineering skill, design, engineering pool, manufacturing competencies in non-Indore locations. So how do you think 1,000 crore out of which 600-700 crore coming outside India will look very different than the just we knew 5 years back, right? So how is it going to look like?
See, we are not growing suddenly. We are growing gradually year on year. We are gradually adding manufacturing facility. We are also gradually complementing our team by recruiting people. As the company grows and becomes more profitable, our capacity to pay and capacity to attract talent improves. And so I do not see any big issue. Yes, manpower is a problem in India today, but it is also due to COVID. But I believe that from next year onwards, all the new batches coming out from engineering colleges would again have good people. and the talent pool available will improve. So we do not expect any big issue in manpower or capacity planning, etc. in the coming years to be an irritant to our achieving 1,000 crore.
Sure.
Market is not a problem. The problem is only going to be the talent and capacity. Capacity we can build because we have money. But talent is something we have to attract, and we are doing everything to do that. ESOP, turf cricket, restaurant, employee engagement activities, good campuses are all part of that.
Yeah. And talent has been our core focus area for such long, every time I talk to you. So is there something like you're looking at some place like a Bangalore or where talent is in abundance to have a center of excellence or something like that?
No, unfortunately for the type of the business we have, the talent has to be where the plants are.
Yeah, sure. My last question, Pratik Bhai, is, we have been basically a gates, valves, screens company, and you have in this presentation shown a lot of products which are very different. So how much do you think, apart from gates, valves, and screens, which is 90% of our product line today, how is the product mix going to change, and how is that going to impact the profitability?
So 10 to 15% new products will contribute once they get stabilized. See, for new product to launch is very easy. To do new products to capture the market and become a dominant player takes time, 4 years, 5 years. So all these products which we are launching will in years to come become a dominant product on their own. And we hope that all these new products would be able to get us close to 10 to 15% of additional revenue in next 4 years' time.
And you are going to launch it across the globe, both in UK and US?
Some of the product, yes. Not the invent product, because we have the mandate only for India.
Okay.
However, invent will be buying from us and selling it themselves globally.
Sure. Thank you, Pratik Bhai.
Thank you. The next question is from Mr. Rahul. Unmute yourself and go ahead.
Yeah, hi, sir. Thank you for a comprehensive presentation. My name is Rahul Jain I am from JM Financial. So, my first question will be, so your current capacity has a potential of doing around 800 crores of turnover. So, you have already guided for 1,000 crores of turnover by FY28, right? And so how do you plan to achieve this level of revenue on a current manufacturing base? Especially the growth for FY26-27 will be crucial on your current assets.
So in this year, in December, one plant will come online in Chennai. And in May, a plant will come online in UK. Which means I have 2 plants being added this year and 1 plant which will be added next year sometime in October, November. So with these 3 plants, we will exceed 1,000 crore manufacturing capability.
Got it, sir. So, sir, the plant you mentioned, which will be coming in next year, October, November, which one is that?
The SEZ plant. The extension of Unit 4 in Special Export Zone, Indore.
Got it. My next question is, sir, who is your competition in India and overseas? If you can just mention or highlights a few of them.
Rahulji, there are so many products and each product has different competitors. So for gates, by the way, gates, we have more than 70% market share in India. So there are very small companies, turnover-wise, who are our competitors. However, my request to you would be, because of the time constraint, that we have a frequently asked questions, which is on our website also. And if you go there, you will get all these details which you are seeking, like who are the competitors for various products in India, outside India, what is the potential revenue from different products, etc., etc. Everything is in that FAQ. So that would help you to know more about the company also, and also at the same time answer your question.
Done, sir. Sir, my last question is, what is your current capacity utilization?
We are not a mass production company. We are a discrete manufacturing company. What it means is that the same plant can deliver much more, provided I can produce and someone will buy it. If you see our revenue quarter by quarter, generally in the first quarter revenue is 10%. In the first half, the revenue is 30% totally, first half. In the third quarter, the revenue is 60%, and in the last quarter, the revenue is 100%. So 10, 20, 30, 40, quarter by quarter, this is how we grow. Now I would love that every quarter I have 40%. Then my same plant would be having capacity of 160% instead of 100% today. So by just adding people, I can increase the capacity of the plant. But if no one is going to take the delivery in quarter one, what would I do with all those people? So in case of companies like us in discrete manufacturing, you cannot just say what is the capacity. The capacity is dependent on my utilizing all the 3 shifts throughout the year. Is it possible? Yes, it is possible. Can I do it? No, I cannot do it because the EPC contractors and everyone, the whole system is geared for taking delivery in the second half of the year.
Got it. So my last question.
Rahul, I will
just small question.
To interrupt. You can. There are people in a queue. I will request you to come back in a queue.
So there's just small question. One. So what are your CapEx plan for FY2025-26 in terms of amount? How much you will be investing? Just next 2 years.
We will be investing every year somewhere between 20 to 25 crore. So every year we will be investing 20-25 crore to add some facility. And this will keep on happening for next 2 to 3 years.
Sure, sir. Got it. Thanks a lot. Thanks, Satish.
Thanks, Rahul. I will request participants to restrict your questions to 2 questions. The next question is from Mr. Bhavya. Please unmute yourself and go ahead.
Yeah, so thank you for the opportunity and congratulations on a great performance. I have 2 questions. The first question is, we have grown really well in the Southeast Asia market. So just wanted to know what do you think is the outlook going ahead, and how is the order book look in accordance with Southeast Asia?
The order book is still great. We have more than 100 crores of orders for Southeast Asia.
And do you envisage more orders coming? Because you had spoken about Singapore having.
So we are planning to enter Vietnam. Last month we got a $1 million order. I had just completed a tour of Thailand, Singapore and Indonesia. We are entering Indonesia, Vietnam, Laos and Cambodia this year. And I expect that these markets would also open up for me. In Thailand this year we are projecting revenue between $2 to $3 million. So yes, we are now going and becoming aggressive. Since the capacity build-up is taking place, we are becoming aggressive and trying to enter more and more new markets in Southeast Asia.
Okay, understood, sir. My last question, you spoke about the disk filter. So just wanted to understand with the total Invent portfolio that we will have or we will develop, what kind of market are we targeting, if that's possible to give a number in India particularly?
I would say if we do everything right, we are looking at anywhere between 75 to 125 crores.
Okay, understood. And when we do develop some products going ahead with Invent, will we be manufacturing some of the products for them to sell outside India, like you mentioned?
We are already doing it. This year, our export to Invent has been close to 9-10 crores.
Okay, understood, sir. Thank you so much and all the best, sir.
Thank you.
Thank you. The next question is from Mr. Pratik Bhandari. Please unmute yourself and go ahead.
Hello.
Pratik, go ahead.
Yeah, thanks for taking my question. Just wanted to understand that you are giving a guidance on revenue front, approximately 30%, right? For the FY25.
Yes.
But then coming back to the fact that for FY28, you are giving a guidance of 1,000 crore rupees. So does it mean in any way that we are, looking at a slowdown in somewhere in 26, 27? Because if the 30% has to be continued in terms of revenue growth, we would be clocking more than 1,000 crores by FY28. So just wanted to get a sense on that parameter.
Pratik ji, you cannot grow 30% every year. So this year I am growing 30% doesn't mean that every year I am going to grow 30%. However, we are quite confident of maintaining growth to achieve 1,000 crore in 4 years' time. It is also possible we may do it in 3 years' time. But it is better to be conservative in your guidance than fail in the eyes of investors.
So is there anything specific that is leading to a 30% growth in FY25?
Order book, waterfront addition, so many things.
So you don't see the continuity of the same in FY26 and 27. That's what I wanted to understand.
I did not say that. What I said was we expect to reach 1,000 crore by 28, but it could also happen in 27 because our order book is strong. But
Right.
if I could predict the world 3 years down the line, I would be a genius. I cannot predict it. I do not know what may happen, what may not happen. So that is why we give long-term projection, but in the short term, I will give year-by-year growth projection.
All right. Thanks a lot.
Thank you. The next question is from Mr. Tej Patel. Please unmute yourself and go ahead.
Yeah, thank you so much for the opportunity. Am I audible?
Yeah.
Yeah, thank you, sir, so much for the opportunity, sir. So I have 2 questions, sir. The first one is, sir, regarding the overall industry size. So, for example, sir, referring to your investor.
Can you be little louder?
Yeah. So, sir, is it now okay?
Yeah.
Hello? Yeah. So, sir, I was saying, referring to your investor FAQ, it is given that the total market for our equipment is around 8 to 900 crores in India right now, and probably 14,000 to 15,000 crore ex India. So, sir, what I am trying to understand is the market really small because of the given current market size of the wastewater and the water sector as a whole, and the increase in capex in the water sector recently. So what I wanted is more clarity on what would be the total water and wastewater equipment market in India, and out of that, what is our addressable market and the growth rate that you are expecting in it.
So 800 to 900 crore was our addressable market in India.
Okay. So what would be the
Now
total
this can increase if the government increase the spending on water, wastewater. My belief is that you will have built enough roads, you will have built enough Vande Bharat trains and train stations by 27-28, and one fine day the government would have to really focus on investing in water as well as wastewater. Investment of water is going on, Jal Se Nal, etc. These two should be tapering down by 27-28. So I believe we are at 30% of the total capacity required in India today. 30% in wastewater treatment. 70% is still to be invested. So the day state governments, cities, center decide that now we have to focus on this, the market size will increase many folds. But the projection of 700, 800 crore which is given in my FAQ is based on the way the market is evolving today, not for future.
Okay, sir, get your point. But sir, now there are a lot of equipments used in water and wastewater, like for one of that is membranes, right? So what I'm trying to
We
understand
are not
is,
doing membranes.
yeah, sir, I get it. But sir, what I'm trying to understand, out of the total equipment, what percentage of the equipment are we dealing in?
Close to 40-50%.
Okay. And sir, I also wanted to get your view on how was the bidding process. I mean, if you look at let's say 5 years back, how was the capex going on in water, and how do you see it now, right? So do you see more projects coming in now?
It has increased at least 5 folds.
Okay.
And still it is very low.
Okay.
For the need of the nation.
Okay. And so one last question was, sir, I think our gates goes in dams also, right? If I'm not wrong.
Very few. We don't focus on dam gates in India. We do that in America, but we don't focus that in India. Because the projects never get completed in India.
Okay. And sir, what would be the replacement cycle for our equipments?
25 to 35 years.
Okay, sir, got it. No problem. Thank you, sir.
Thank you. The next question is from Envision Capital. Please go ahead.
Hi, sir. This is Alicia from Envision Capital. So 2-3 questions actually are more like clarifications. You mentioned capex of 20-25 crores every year. Will this number be slightly higher this year because there'll also be incremental investment we'll have to do in waterfront?
Waterfront investment is already done.
We were supposed to make some investments to expand their capacity. We were taking some shed or something next door.
That is what expansion very less. It is very less, and the machinery has already been dispatched from India, Indore. So that is how I'm going to commission the plant on 31st May. So the investment is not critical, and we fortunately also got 75,000 grant from Scottish Enterprise, and that will take care of more than 30% of our investment. Cash grant we have got already received.
Okay, understood. And what is the kind of margins waterfront is doing currently?
The margins at waterfront are not great because the revenue is not great. But we expect margin profile of waterfront to improve over the years and come to the same level as Jash and Rodney Hunt in time to come. I would say this now the margins are close to 3-4%, and year on year we expect 3-4% growth, so that in next 2 to 3 years time they have more than 10% margins.
And this 3-4% you're saying is at PAT level?
PAT level.
PAT level, understood. You were mentioning in the presentation it says that the waterfront order book currently is 30 crore rupees.
Exactly.
So are we expecting very significant inflows this year, because we're talking of revenues going up 4-5x in 4-5 years?
Already we have every day we are getting big orders.
Okay. And like US, will this also require bonding, giving any kind of guarantee or anything like that, which was limiting our growth in Rodney Hunt a few years back? Are there similar conditions in UK or waterfront?
It would not be a problem because waterfront is already a profitable company. Rodney Hunt was not profitable company, that is why it had problem.
Okay. And there was some shares that we had of Jash Engineering that we were to issue to waterfront. Is there a timeline defined to that?
It's done. Already done. It was done in April.
Okay,
April 2024.
Okay, I will check that then. Thank you.
Thank you. That was the last question. I will request Pratik sir for the closing comments.
There is one more person, if required, I can give that answer so that then everyone is satisfied. I think Naveen has raised his hand.
Yeah, Naveen, please go ahead.
Yeah, thank you for the follow-up, sir. Sir, we were expecting a large order from US. Any update on the same?
So we are, as of now, working on 3 large orders, one in Hong Kong, one in Canada, one in America. All the 3 orders put together, we are talking of more than $50-60 million. Since these are large orders, they are taking time. What is our possibility of getting these orders? I would say we have more than 75% chance of getting all the orders. However, when will we get all these orders? I would say we'll need anywhere from 2 to 4 months time.
Got it, sir. And final question is regarding tax rate. If you could comment, what would be the tax rate going forward? Because we had seen a significant jump this year.
Yeah, this year only we have 100% exemption in SEZ Unit 4. After that, we have 50% of the tax level. So at present, our tax level around is 22, but later on it's around 24, 25. And in USA also, we have already absorbed all losses. So next year onward, 100% taxability are there. So that will also reflect in the tax rate. So it will be 25 plus approx from next year.
Got it.
Okay.
Got it, sir. Thank you. That's all from my side, sir. Thank you, Prateek.
Thank you.
Thank you, Ravi. Veena have put some question on the chat box. Can you elaborate sustainable EBITDA margin? Veena, are you there only?
I could not see.
I think she's not there.
Sir, I just wanted to.
Yeah.
Sustainable EBITDA.
So going ahead, what would be the drivers or the margins to go to the level of 25% plus?
I didn't say 25% plus. I said between 22, 23 to 24, 25. We are in discrete manufacturing. What does discrete manufacturing mean is we have high overheads until a certain level of revenue is not reached. At Rodney Hunt, that high overhead used to put me in losses. Now that we have reached a certain level of revenue, we have been able to improve on our profitability. The same team would be there, the CFO, the Vice President Engineering, the President, the Head of Manufacturing, they would be there, but revenue will still be going up. The addition of people would be more on the lower salary level. And that is why as the revenue starts growing for Rodney and for Jash, for Swiftpath, for Waterfront, our EBITDA margins would start improving if we have the same policy for taking orders. So we don't go very aggressively, try to take every order, etc., etc. Then you will see that as the revenue increases for a given company, its EBITDA margin will improve. Because fixed cost would be covered fast.
What is the working capital cycle?
On the working capital cycle, what I can do is send a small PowerPoint presentation explaining that our working capital cycle is not more. But in a minute, if you want to understand, I can explain that when 40% of your revenue is done on the last quarter, then we can also send this or we can load it on our website or in the FAQ to explain that really speaking the working capital cycle is not high. But for the general guidance, I can tell that if 40% of your revenue is in quarter 4, then it would always look like our working capital cycle is more. But if you average it out throughout the 4 quarters, then you will realize that our working capital cycle is not more than 100-110 days.
Yeah.
This we can load on the website, or we can also add in the frequently asked questions so that you can get an idea. Okay?
That was the last question, sir.
Okay.
Yeah.
Yeah.
Yeah. Okay.
Thank you, everyone. Thank you for patiently listening me out. If you have any questions, you can write to me or to Dharmen. I would be embarking on a 20-day tour, but in my absence, Dharmen is there and he would reply to all the questions which you have. I once again assure you that we are steadfast in our resolve to meet whatever we tell or project or guide. And so do not expect any great surprise if we do whatever we have told, because we have a history of achieving whatever we have said. With that, I will like to bring this meeting to an end. Thank you, everyone.
Thank you.
Thank you.